Charlie, your mic is off.
Okay, the F1 screen was mixed, plus or minus, favoring lower because of where the volume was, but not clear cut. Here we have a D pattern, leaning B, and we have a potential move out of the middle in M period now. This is the time of the day when the moves can really take off and go. From 1 o'clock till 2 post the lunch in Chicago. It's not usually a good time, but they start probing. This, when you look at the volume, we got the mode below the mean, and that generally favors a retest of the low end or lower. Now, if we don't crack this 2728 area, my guess is we close it right here as we await the news out of Europe. So we have been dealing with pretty strong Ps. The reason has been a debt deal out of Europe. The sovereign debt problem is going to go away. And we've always said, how's it going to go away? Well, they're going to vote more sums of money. They're going to bite the bullet. Merkel and Zerkowski. We've got a deal. A deal is imminent. But the hang-up has been Germany said that $220 billion worth of euros they put in was it. And no more. And $700 billion isn't enough to solve the problem. $1.3 trillion isn't enough to solve the problem. And nobody wants to write the check, so that's where we are. So my guess is we got a pretty good chance of them kicking the can down the road based on what happened today, and the announcement will be postponed to 11/3. That does two things for them. It delays the final day of reckoning. They've kicked the can down the road for a couple of more weeks, and gives them time to sort through the details. So we'll see what happens. So we're in a position to break it because M's got a move that's coming out of the middle. And on our F4 screen, what type of a setup did we get? Like I said, the biggest thing we had going against the trade that we talked through was the time of day. But now we have enough. And you can see we're not generating a lot of volume when we come down, but if we take this level out right here, you're going to probably see the volume pick up. So we've had our M patterns. Lower highs, and we get a little bit lower lows, but we really weren't able to crack 1230 and kick off the stops that were certainly underneath that. This player's been pretty steady. It gets down to minus 5K. They bring it back up to minus 4K. So we don't really have large institutional participation to the downside right here. And that's what's been missing. But if we can crack 30, we got a chance to set off stops and get some momentum to trade lower. Lower highs. So my guess is we get a retest of that number and or take it out. And that's occurring right now. So your F5 screen would show you the auction process. Okay, I remember when I first got started trading and going into trade rooms, having an open line back when you had to pay for it on the phone yourself. There was a per minute charge and the rest of it. And we would try to all trade simultaneously, all take the same trades, and do that. And it never really worked very good. One person would dominate the conversation. The others would follow. Then that person would hit a rough patch of the road. That person's opinion that had been dominating would fall out of favor, and it kind of moved around. And what you found is that what was a right trade for one person wasn't quite everything the other people wanted to see. And the way that the way it led to in the dynamics in the group is that people lied about their trades. Oh yeah, I took that trade too. For the ones and when they weren't taking the trade. So trading is kind of interesting. Everybody will be trading within the same guidelines and the same patterns, but something will make one person take the trade and the other people won't take the trade for some reason. So talking through trades is fine. Talking about them are fine, and the rest of it, and it helps you get conversant with the methodology. But it doesn't really make you a trader. And so we talk about enough trades in the room. Bill does, John Bottomley does, I do, especially if they're called or special situations. But we all think it could be a pilot to co-pilot situation, but it's not. And does anybody know what the difference between flying and trading is at the edges? Say we're about ready to hit stall. Or we've got V1, V2. On a takeoff roll, what the difference is? No, it's physics. Plain and simple. And with 100% certainty, this will happen in flying if you don't do that. And in this game, it's not 100% certain. So what happens in flying is at a certain weight, altitude, airspeed, temperature, and the rest of it, that damn thing's going to fly or not fly. It's going to come out of the air. It's not going to get into the air. And the negative consequences on that can be death. If you're in the air, it probably is. The negative consequences in trading over here is that you lose some capital, physical capital and emotional capital. So we will talk through trades, Jim. We'll try to show you the methodology and the rest of it. You can't really miss it. It is prescribed. But Charlie's taking a trade now. Jim will take a trade and see what it feels like. It can get you started, but it's not the solution. It really isn't. And I've lived it. I thought it could be true for me too a long time ago, but I've been in and out of so many of those groups and had so many conversations, and I'd never seen it work yet. So just actually easier to give your money to somebody else and let them trade it for you. So here we are. This is the F1 screen. This is the daily. We sit here, top of value basically is holding, bottom of value is basically holding, and we're doing this. Okay, up here, this is when the sovereign debt issue was right in front of us. It was impacting our stock market. We did have a flight to quality on. We had a rush on European money market funds when this new summit and this new meeting was to solve that problem. We managed to trade down to 27.16, 27.20, somewhere in there. And here we find ourselves. Sovereign debt problems pop back up. We're going higher. And the stock market will probably come lower. So we're right at the top of the trading range. Now the big news, so on this one we've got a P pattern. And we would buy weakness to retest resistance. Tomorrow's news, durable orders expected to be minus 1%, ex-transportation plus 0.4. So the transportation sector, it was really, really good last month, may not be so good this month. The focus is on ex-transportation. New home sales, 300,000. Given the seasonality and time of year, that one could actually come in a little higher than forecast. I don't have a clue on which way. Durable orders, ex-transportation will do. But what I do know is that I see lots of 5 and 6 year zero interest programs with cash incentives too. And a lot of them are coming out of Chrysler and General Motors for some reason. So it's not the cash for clunkers program, it's the cash for new car program being run by a government. So I don't think sales are as strong as they appear, can appear at times, just because of the deals that are being offered. And if anybody, because of the excess manufacturing capacity around the globe in the automobile sector, everybody knows that if you wait a quarter or 4 or 5 months, you'll probably get a deal on interest rates or financing or extra discounts in the cash price of the car, which tells me that, again, sales aren't as strong as they would like them to be. And with consumer confidence now below 40%, it's pretty easy to say, well, yeah, I'd like a new car, but maybe this one will last me a little bit longer, and we'll see what's going to happen in the economy. Okay, we have a very, very strong P pattern right here. It is congruent with the F1 screen, so we've got a pretty strong buy here. And the two issues that we face tomorrow, 5-year auction, what does it take to move that paper? That probably will impact the market post the news. And then I'm guessing it's 50-50 for what comes out of the EU. I mean, Merkel has pretty well lost the German parliament. I don't know how far she's gotten this far. And Austria, Denmark, Norway, Finland, Germany are being asked to pay for this good stuff. And if I were German, I wouldn't think too kindly of it. So we've had really, really good resistance starting above 29.04, and we're here. And we had a good 2-year auction. So I can buy weakness once tomorrow to see if we can extend the range. And then if we can't, my guess is the 5-year auction probably take us back down into at least in that 128.20 to 24 area. So a lot of news on tap for tomorrow. Okay, we closed. I had us closing at 04. To let that one go. So definitely dealing with a P. This one says trade higher. We got a very clean break here at 29. And if we closed at 04, that's 1. We had this move out of the middle at 26.5. We have a J period low right here at 28. So here's 2. We had the last rotation down at 20, 21.5. There's 3. And then we had our breakout down here at 16. So there's 4. So we have basically 129 even. 26.5, 28, 24, then 20, 21, or 16 to 21. And there's where support is. To the top side, we've got, looks like what, 6.5? Have a high of 7.5, so we've got 1. This little dent at 11.5, 2. We've got this volume bulge at 16.3. It's a lazy man's way to do it. and there's 4. So we have, you can make it, well, let's not do that. Let's just make it 8 plus or minus. Don't want to incur the wrath of Popik this afternoon. John's getting pretty cantankerous in his old age and just don't like to take him on. So the aggressive buy will be 28, 29 to 01. And then we'll be playing that breakout. We'll be working the 21 to 25 area. And if they don't take out the overnight sessions high, we don't get through that 8 to 12 area, I would see some selling as they use the 5-year to set up the 7.5-year, all impacted by tomorrow's news.